All right, we've given everybody long enough to get on. Those who are on, we'll thank you very much for being on time. And those who didn't make it, they're going to have to listen to the recording. So that's for the recording. So this morning, we have the opportunity to get with Refund Advantage in our webinar series. So far, the only other banking partner that has participated has been Refundo. We had a good time with them, and now we get to spend some time with our good friend Kenny. And I don't think Jen's joining us, but Margie is going to be joining us in her stead. So Kenny and Refund Advantage and Right Way have a fantastic working relationship. I would say that we are all friends, in addition to them being a vendor of ours, and we just have a good time, good camaraderie, and you'll probably hear some of that come through in the webinar as we probably banter back and forth a little bit, in addition to covering all of the relevant information. So without further ado, Kenny, are you on the line?
I am on the line, Jeremy. Thank you.
There he is, Kenny, in the flesh. Thank you.
Flesh and bone, right
here.
So, ready to go.
You know how banks are with all of their security, so they have a lot of firewalls and things kind of keeping us from, or them from getting in trouble and their customers' data being breached. Have we figured out how to circumvent that, Kenny?
We haven't, but you do have the slideshow. Are you able to put that up on your end so people can see it?
Absolutely, I do have it. So I'm going to present, and you're just going to give me the next slide command. And hold on, let's flip this. We're going to make that the side, and then I want to look here real quick. Cool. So yeah, we're up and rocking. So we've got some jumping people with their hands in the air.
Yes.
Like they just don't
care. That's the
care.
very first slide. They're very excited about this coming.
All right. I'm gonna be quiet, and you just tell me what to do.
Okay, and I hope everyone can hear me okay. And I do have Margie in here with me as well. We are on speakerphone, so raise your hand if you need me to repeat anything or if I'm not coming across.
Actually, that brings up a good point. Yeah, we can hear you good, Kenny. Just to interject real quick. So the way that if you guys have questions, if you could please submit them through the chat. I'll be monitoring those as best I can. Any that are relevant to that current section, meaning if we're in that specific topic and you have a question, I'll try to interject and politely interrupt you, Kenny, just to pose that question. Any that come in outside of the topic section, like you're asking about something and we're not in that section, we'll hold it till the end, and then we'll jump back and cover that item. So
that sounds great. Thank you.
All right.
And to that point, if someone asks a question and if it needs a little bit more follow-up, what we'll do is we will table that and get the clear and accurate answer to that question. And when we we'll add it to the presentation, and then we'll send you an updated presentation, Jeremy, and that's the one that you can actually give people if they need it. So that all the questions that were even asked, we're doing that with all of our presentations this year. So just to give you that. So are you on slide number 2 yet?
I am now.
Slide number 2. All right, great. So we have option slide. That's what we call it. I just wanted to give a little bit of history for the Refund Advantage team, and just to point out the year 1989, we actually have staff members that go all the way back to 1989 that's been in the tax industry. I joined the tax industry in 93. We have others that joined back in the early 90s, and we've been here within the industry, maybe at different homes, but we have blended here at Refund Advantage. And just speaking from history, we do know what our EROs need and want in order to provide the best customer service and the best products. So we can go ahead and go to the available disbursements methods right at the end of that slide. As with last year, we do provide the 3 disbursement types that most all EROs are familiar with. We call them instant issue checks, printed right in your office, the prepaid cards, and then the direct deposits when an individual wants their refund direct deposited right into their own bank account. That's been our disbursement types for a few years, and it's pretty comparable to the industry. So we can go to slide number 3 now. Get right to the heart of it all. Thank you, sir. All right. So one of the biggest things that I think the industry allows the EROs to do, and we are plugged into that very much so as well, are the ERO advances. We provide the office startup advances, we provide software purchase assistance, and we do provide fee assist during the season as ERO advances as well. The fee assist is really important, especially in the last couple of years since the IRS has delayed funding and will continue to delay funding. Did you do the next one? Okay, and continue to do the delayed funding. There's always rumors towards the end of the year on when and where and how it will happen, but all of our EROs that work with us have really enjoyed and taken advantage of the in-season ERO advances. We'll talk a little bit more about those in order to keep their operational capital going, payroll, stuff like that. So we are, again, this year, adding those advances.
So question for you on those advances. Yeah, this is a Jeremy question. We haven't had any come through from the audience. But how do those typically work with the fee assist in terms of the dollar amounts per return, the payback time frame, like your guys' recapture period? Is it a revolving line of credit kind of deal, or how does that work?
All right. So the fee assist will start. It'll start looking at the applications as they come through. It'll look at the preparation fees, and it will start, I guess, in layman's terms, adding those up, and then it'll start releasing the assist amounts as soon as you get to a certain threshold that we know that the system knows will be paid back because of its intelligence. It'll be paid back for the different fundings coming in. We would advance up to half the prepaid, the tax preparer's fee, up to $300. Now, and that's from a mix and a combination of the applications coming in. So fee assist doesn't happen right when we get the first application. We start adding them up as they come in, and then we'll make a deposit to your account right after that threshold is met. And I think it takes, and it's different for each person, I think it takes probably anywhere from like 20 to 25 applications coming in before the system will go ahead and start releasing fee assist. The payback on that is, the payback on that is with the fundings being so delayed, especially where EIC is concerned, it's set at 50%. So as your returns start coming in that do not have EIC on them, the 50% will start be taken out of your fees for your each fee assist. It won't look like a lot at first because the refunds that are going to be funding are probably not going to have any type of EIC associated with it. As we all know with PATH Act, the EIC will be dropped somewhere late February. So we educated our EROs last year, and we have done, I think, a really good job educating our EROs this year on managing their fee assist appropriately, because as with last year, we received 2 huge fundings the same week, and the fee assist and other fees that we'll talk about, Margie and I, other fees we start taking back as well. So the system will look at those huge fundings and say, wow, we got a lot of money in, like a lot of money. I'm going to have to collect all this stuff back because this is the date, and we probably won't get any money like this going forward. So we try to prepare them that in the very first funding coming in, the fee assist may jump up from 50 to 75%, but the system does have logic to adjust that in terms of the date. Does that help?
Yeah, no, I mean, it makes perfect sense to me. We received that sort of feedback, and one of the reasons why I wanted to clarify on that point was because it was somewhat of a surprise to some individuals who, hadn't been monitoring it all that closely, didn't know what they had gotten in, and go, hey, this all funded, but this is what hit my account. And the other challenge with that,
right,
because it's not necessarily a one-to-one with the taxpayer that the money was lent the prep fees on, that you submitted the application, and who they then who you're pulling fees out to repay that item. There's not a one-to-one direct correlation because that taxpayer may not have funded. So that's one of the other items that just presents a little bit of a twist for reconciliation within your office accounting. It's just a little side note, something we observed last year and thought we would throw out there. And I apologize
that's right.
for that.
And no, that's a very good point to bring up, because we had a lot of questions about that. So when the funding comes in, and say for instance the ERO got and this is not including any other thing that we would take out of their fee. I'm just talking about the advance right now, the in-season fee assist. When the funding comes in, and in the fee assist we have loaned out $10,000, and the date hasn't been pushed up or pushed back or whatever, the 50% would go in, and we would take $5,000 of that. So just to make it an easy computation, is basically if you get $10,000 in, and barring no other changes, we'll take $5,000 out. So it's, again, not a one-to-one correlation like you said, Jeremy.
Yeah, and if 100% of your applications are in the early season have some sort of EIC on it, then that first funding is going to get schwacked big time. Because that's going to start recapturing from all of that. But if you do have funding prior to that, and you had, let's just say, a $5,000, fee assist cap based on your volume or whatever that is, and you have taxpayers that do fund because they don't have EIC on their return, they fund in that early portion of that season, that then replenishes that kind of $5,000 bucket to where you guys would just fill it back up, correct? If for whatever's paid back?
That's correct. Right, whatever's paid back, and then as the days go on and we start getting more applications, the fee assist turns back on and starts depositing money again, and then it eventually stops after basically the first big funding. We stop doing fee assist because everybody should have a pretty good amount of prep fees that have been deposited, and we have been basically paid off.
That makes very good sense.
Yeah.
All right. I think we've covered that slide in thoroughly. Do we want to jump on, or do you have something else?
Let's go to 4. No.
Woohoo! We are on 4.
Margie's going to give me a break. You're tiring me out, Jim.
Sorry.
Okay.
All right, Margie, you're up.
Okay, the next slide should be new EROs to RA. And what we want to let you guys know, of course, we know there's cases where there's new EROs coming over to Refund Advantage, and they're coming from different banks. So they are not eliminated from our programs. They are very much eligible.
Not at all. Right.
So in order to participate in all those advanced programs, we're going to ask for information from the previous bank. And there are 2 things that we're going to ask for: a report showing their fee deposit history, and a report with a funding report that shows how many applications they had, how many returns were funded for federal, and in some cases state, depending on the bank. The next step, of course, once we receive those reports, the ERO can request, once they enroll with us, they can request an amount that they wish to have for office startup or software purchase. And we provide those reports. We attach them to the request, and it goes up to client operations, and that's where the system underwrites them and lets them know what's available to them. And then we'll give them a call and let them know what they've been approved for. So they are very much have the opportunity to have those ERO advances, even though they're coming from a different bank.
Yeah, we get a lot of questions from EROs, both on the phone and on the road, and when we go to the IRS seminars, visit our partners, that they ask, well, would I be able to get an office startup? And of course you will, because we wouldn't be on the road selling to EROs and developing relationships with new customers if we wouldn't be able to provide our suite of products to them. So we just wanted to reiterate this particular slide because it's a little bit of a manual process for EROs. I mean, when you enroll, you'll be underwritten automatically, but if we get your fee deposit history and your funding report, we can certainly work with that and make sure you get an amount that meets your expectations in terms of your portfolio of business.
So what is?
Oh,
sorry.
No, go ahead.
No, go ahead. I'll hold my question.
Okay. The next steps that are required, and this is for everyone, whether they are new to Refund Advantage or they're an existing customer, in order to get the Office Startup Advance, they'll have to complete the Getting Started, which is downloading our Customer Center to their desktop. They'll also have to complete the compliance test and then send in the signature page of the ERO agreement. So those steps are required in order to release the Office Startup, and that's for new and existing customers.
And that's the commitment exercise that we require. It's basically going through the process that allows you to check all the boxes. It allows you to take the compliance test, which is required basically from every bank in the industry, and also the acknowledgement of the ERO agreement that all banks have as well. And then we can say, yes, you have committed to work with us, so we will go ahead and release your funds that you have opted in to get your loans. Now, what's a little bit different on that is the software purchase assistance. The software purchase assistance does not require you to do all of this stuff because a lot of people need software purchase assistance just to get the money to buy the software so they can enroll. So we do have software purchase assistance that you don't have all these steps you have to go through, but we do have that out there. The maximum for software purchase that we provide to our EROs is $2,000. A lot of software companies don't charge that much, so they just the ERO requests how much they need, and we would advance that to them.
Gotcha. So my question is twofold, or two different questions.
Right.
New ERO to RA, they have experience in the industry, and they have volume. They've got, prep fee history and so forth, and they need to get that over to you guys. What is the process by which they do that?
After they get their reports and everything, Jeremy?
Yep.
Okay. Yeah, you can either send it to one of our staff members. You can upload it?
Yeah, well, they can, usually what happens is they'll call in, the ERO will call in and make a request, all right? And they usually send those requests. The front line will take, our customer service will take the request, as does the sales department.
Mm-hmm.
And if we see that they're brand new coming over from any of us, if we see they're brand new coming over from a different bank, that is when we'll ask for those reports, and those will be forwarded to either the salesperson or they can send it into support, attention, client operations. With their EFIN on it.
And they can come to us, any way that the ERO can send it. I mean, they can these days you can take a picture of it and email it, but we can receive it by email and fax, and we will attach it to the request that we send up. And those requests, they're processed pretty quickly. Mm-hmm. We don't wait around too much for the ERO advances. Our first customer, the first line of defense that we have, and the most important line that we have out in the industry are our EROs. So we make sure we take care of them very quickly.
Do you guys have any sort of sample report or report name from each of the banks? Just because I remember in previous years somebody coming over from one of the lesser known banks or that we maybe don't have a relationship with because it's, specific to X, Y, and Z software company. We weren't certain what report to grab. I don't know if you guys have that like predefined. If you're using A bank, if we need this report and this report, and if you're using B bank, it's this and this, and something to that effect.
Yeah, it's not
Probably
necessarily, not a name that you can actually throw out there. When we say fee deposit history, pretty much all the banks have the same nomenclature that they use. I've worked for 3 of them. So, and then the funding report, everybody, I know, right? Everybody pretty much in the industry, banking side of the industry, knows what the funding report is. If there's a question on that the ERO has, we can pretty much get them through, walk them through their own portal, and say, and we've done that before. We've said, okay, just log into your portal and read me a couple of your reports. That's the one we need. So.
Gotcha. And the second part of, I think is relevant to this portion was, let's assume that they don't have a fee deposit history report or a funding report because it's a brand new EFIN to maybe somebody just in the industry, maybe worked for somebody else for a period of time and now, striking out on their own, hanging their shingle and going to work. What's the story with that?
The story with that is that we go ahead and underwrite them through the system, so there's no manual intervention at all to get them a little bit more money than the system would allow. But the system will look at their EFIN, they look at the EFIN owner's information, they look at the EFIN owner's, it can go to demographic information, where they're located in the United States, all that stuff, and our system will go ahead and underwrite them, and there's a certain threshold that new EFINs to the industry, they'll still be able to benefit. It just won't be as much money. They probably won't be able,
Go ahead, sorry.
We'll talk a little bit about like loyalty cards. So if it's a new EFIN and they may be able to benefit from loyalty cards in season, but if it was an old EFIN or an EFIN that's been with us previously, they could probably benefit from having the loyalty card starting December 15th, and we'll talk about that later. But, yeah.
Do you do a soft hit on that?
A soft hit, yes.
Okay. Cool.
All right. So that's slide number 4, right?
Yeah, we can. We're on
Slide number 5 is software purchase assistance, and we've been talking about that. The presentation is always to start the conversation, and then normally you'll start talking about everything that you've already put in the slides. So we don't necessarily have to talk about software purchase assistance unless someone has an additional question about that. It goes up to $2,000. It has started as of this week, so if someone is looking for assistance to purchase their software, they can go ahead and call in. They request the amount up to $2,000. We'll underwrite them for that, and then once approved, they'll have to go in, opt into it, and we release the funds via direct deposit to their account. Of course, they have to enroll first and go through a couple of those steps, but yes, we'll go ahead and send out their direct deposit as soon as they opt into the software purchase assistance.
Well, we do pretty much the majority of ours in sort of an arrears environment to where it's not too much upfront, but some may take advantage of this as well.
Right.
On a side note. All right. Cool. Next one.
Okay, so we're going to go to the next slide, and it's the office startup advances. And I'm going to start off here because we've been talking about this. Of course, the office startup advances are available on December 1st. Usually those opt-ins turn off, and we don't allow anybody to opt in to an office startup advance that they've been underwritten for after December 31st, or towards the end of December, whatever date ends. It looks like the 29th is the end of December for this year, but that's the office startup advances. Those are a little bit higher. in amounts than the software advance. It can go it's all according up to your portfolio, the amount of fees you make, amount of fundings that you had. So that's all goes through the criteria through our system, and then we come out the other end with an amount that we can loan to you. Now, the office startup, as well as the software purchase, there is a cost to that. When we were talking about Fee Assist earlier, Fee Assist is a totally free program that we have. So as you opt into Fee Assist and you go through the first few weeks of tax season, there's no charge for that. We don't charge for anything on the Fee Assist. The office startup and the software purchase, we give you a free first month, and then after that, it's $15 every month for every $1,000 advanced. Now, that's not on any slide in here, I don't think. So I'm speaking to this now, so if you can take a note or two. Again, on the software purchase and the office startup, it's a $15 fee, and that's every month for each $1,000 advanced. But we give you the first month free. Any questions on that while we're here?
No. It's pretty straightforward.
Okay. Good.
I mean, I think the determining factors for the startup cash is going to has a lot to do with history and previous experience and so forth, correct?
That's correct. I mean, we've given office startups to brand new EFINs to the industry. So if you, like you were mentioning before, if you go out and hang your shingle and you want to start your business, we're not one to discriminate, and we can certainly give you an office startup. Again, we look at those attributes. We do give those attributes, run it through the system. We look at the soft hit. We look at demographic information. We look at the ERO, the EFIN owner, and the office startup may be $1,000 instead of $15,000. But we do try to provide as many products as we offer to new EFINs as well as new EFINs that come on board.
It's your money.
I think what I could. Yeah, I mean, it's $1,000. You can buy a couple new computers or whatever. But
that's awesome.
Yeah, if you have history with this, if you have history in the industry, because we do get information because of the Freedom of Information Act, we look at that as well. So if you're coming on board and you've done business with other banks, you've never worked with Refund Advantage, we still have a lot of information that we can use, run it through the criteria, and give you an office startup and software advance. I think that you'll be happy with.
I mean, yeah, doing anything for somebody you don't know, or I mean, you have a very a high level bit of information and still fronting money is pretty significant. So.
Yeah, I mean,
that's awesome.
Those are just like when you have a new taxpayer coming in and you're giving them some sort of loan. I mean, where there's risk, there's reward. I've been in banking for years. The higher risk, the higher reward. But then we have to draw the line of how much risk we'll accept and how much exposure we'll accept. So, but we definitely want to, make sure that when we're out there on the road, on the phone, telling EROs that are either new to the industry or coming from a different bank or got out of the industry and coming back to the industry, we're telling them true and accurate information. We can give you something, but it's not going to be a whole bunch of money, but it will definitely help out certain situations.
So real quick, with these, I have a couple of questions that I think I missed. With the software request for the software, whatever we were calling that, the purchase assistance, that's paid to the tax office and not the software provider, correct?
That's correct.
Okay.
Yeah.
Offices that have history that are looking to, I think we already answered this, an existing office that's looking to expand into a different town that may need some help, some loan money, that then EFIN is available or could qualify for some amount, correct?
That's correct. Yep.
Okay. And when do we need to apply for the office startup advance? When does it open for enrollment, and when does it close again? You see, I see the delivery date of December 1st.
So the opt-ins and everything are open right now. We're delivering, as of this week, we are delivering software advance assistance loans. Those have been going out for a few days. The office advance, office startup advance, you can still call in, request how much money you need. Those typically do not get released until December 1st. But the opt-ins are open right now. You can log in. You can call us and say, I need $5,000. We will look at your opt-in, and if your opt-in meets that number, we'll go ahead and have you opt in, and then that will be set to be delivered on December 1st. So to your question, you can opt into any of them right now because all those are open. Okay. You still have to call in a request, but the software advance will be delivered right now, right when you opt into it, and then the office startup won't be delivered until December 1st.
Okay. So, and then the end of that period to when they could receive money is when?
At the end of what period?
So you guys are starting funding for the office startup on December 1st, and you will cease funding for office startup at what point?
Oh, yes, December 31st or December 29th.
Okay.
Wait a second.
I'm taking
I'm
notes.
looking at the wrong. Hold on one sec.
Hold up.
Yeah. The deadline is for opt-in? Yeah.
December 31st, right?
Yeah.
Yeah.
Sorry, I thought I heard something.
Aren't you plugging in a fan because it's burning up in my office?
You guys are on a lot of
hot air in here.
A lot of hot air. Nice. All right, we're on to slide number 7. We have 10 more after that, so.
Yeah. And we've covered a lot of this.
Yeah.
So,
you're way ahead of the game, Jeremy.
So the fee assist, we've already talked about in the ERO advances. The only thing that I would add to that, again, there's no cost to participate in that, so there's no $15 per thousand. That deadline, of course, is the 31st along with the other opt-ins, right? And it begins the first day of the regular season. So as soon as, if anybody's lucky enough to be part of hub testing, we count those applications as well. And a lot of applications come into us during hub testings, and those get counted towards the fee assist. So some individual offices may start receiving fee assist a little bit sooner than the start of the actual tax season.
And the amount that we advance is half of the tax prep fee up to $300.
Right.
Half the prep fee up to
right.
$300. You got an $800 prep fee. The maximum amount you can still get on that $800 is $300 per taxpayer.
That's correct.
If you have a $300 prep fee on a taxpayer, you're going to get $150.
Correct.
Yep.
Perfect. Moving on.
This is a really good slide. I like this slide that's coming up.
Yeah.
Everybody
Yeah, we're on it.
wants to talk about it.
Slide 8.
Yeah.
Yes, taxpayer advances. What do you think?
Okay. I like.
Can everybody
I like
see the
it.
slide? So,
Oh,
our
we're
taxpayer
looking at it.
advances are to $2,500 this year. Last year, our highest was $1,200. So we've done a pretty big jump, like the rest of the industry has. Our program basically is one program within itself. There's nothing real. Nothing really, I guess, confusing about it. It's $500, $1,000, $1,500, and $2,500. We'll go through the fees in just a second. Of course, there's no cost to the taxpayer themselves, and they can get that via a check or prepaid card. Now, Jeremy, I'm still checking on this because our specs have not been quite delivered to transmitters yet, so you won't see these yet. But I'm hoping that we could support a disbursement type this year. I don't want anyone to get as excited as I am about it, because it may not happen. It is towards the end of October, but right now you can get the taxpayer advance on a check or on a prepaid card. We're hoping that you can get maybe the advance on a prepaid card and then change the subsequent disbursement type to wherever you want it to go. It could be on a check or in a direct deposit.
Gotcha.
But we are working on that. I'm not sure if your need is there, but just to put that out.
We definitely get that, or we've fielded that question previously, meaning, so the taxpayer comes in, they're getting their loan done, and they choose a check, and they would like the balance of their refund after fees and everything, and the loan is paid back to then go to a direct deposit, is what we're talking about, right? So they have a $5,000 refund. They get a $2,500 loan. They have $2,500 left over, $1,000 backed out for prep fees, just to keep it really round numbers, because I'm not that smart. And so now we're down to $1,500. They want that $1,500 paid to their bank account. That's what we're talking about, correct? Which hasn't been guaranteed. You're just working on that currently.
Yeah, and I'm not sure if it's going to come to fruition or what may happen or whatever, but as of right now, our program stands as this, so you can take this to the bank, no pun intended, but this is right here, this is our program, but we might come out with whistles a little bit later. Yep. One thing is, too, I'm not sure what the demographics of your book of business are, but we are available in all 50 states. There's a few states that we have to treat a little bit differently, and we could go into those a little bit more. I think we might jump into one, in a subsequent slide. But yeah, so right now it's available to both new and existing EROs, just like what we were talking about.
Cool. So
and I know if you're getting questions right now, probably about the fees, right?
No, you already addressed that from the top of the slide, so I think everybody's being patient to ask what the corresponding fees are. And if you didn't address them, I was going to jump you with it. So.
Absolutely, I wouldn't expect any different. Right. Okay, so this is fun for, I think, EROs to see, right? It's taxpayer eligibility for advances, and Jeremy, this is one of the things that you kind of preliminary sent us and wanted us to make sure we hit on, because your feedback is probably the same as ours. This is some of the things that was last year.
We're going to have to update.
Yeah, this is some of the things that were last, and they're working on these right now. These are the front-loaded things that an ERO can look for and or be experiencing where a taxpayer would not be eligible to even apply for the loan. Does that make sense?
Right.
Yeah. So,
I mean, these are deal killers of sorts, and I think my thought on asking you guys about this is just for the tax offices and preparers to be able to properly set the expectation for people from the get-go, and just kind of have these in the back of their mind as to, if they see something, they can go, okay, hey, just an FYI, you may have come in for this, but due to these factors, you need not apply. You know what I mean? So
right.
That's
and some of these are really, really, really common sense, like taxpayers deceased. So, but that's in our eligibility. That is listed in there. It's in our code. So if we get a Social Security number that's deceased, then someone wasn't doing their job on the front end. So, but and maybe we had threw that in there just for some comic relief, but we really don't need that with Jeremy on the phone. But at the very end of this, as you can see, it does have relevance. So the taxpayer has filed a Form 8888, and probably everyone on the phone knows what the tax form 8888 is. So we're not really sure that we would get the entire refund in to pay off a loan, right? So that's a upfront disqualifier, if you will. So it does have relevance in there. And we are looking at these right now, too, and we'll probably constantly be looking at them as we get closer to the year because, in my experience, sometimes there's a new form that comes out, there's a new law that's passed, there's something else that happens that we might have to go into the code and add or delete. And this isn't necessarily a comprehensive listing. This is just something that can give the ERO different things that we look at, from entities, taxpayer, all the way up to the forms.
So one of the things, and one of the reasons why, it kind of stuck out to me as something to address was we had a surprise from one of the vendors last year as it related to any return that had a Schedule C on it for a self-employed individual that was not accompanied with a W-2 or issued a 1099 of any sort was then DQ'd. So if they didn't have any other source of income other than their Schedule C income, it was a DQ for the loan. Do you guys know if that is in play for you all or no?
You see that in here?
No, I don't think that was something for RA last year, but it's one of those things where
I'm looking at other things here, and I don't think we had that.
Especially for early filers, right? That's a significant portion of people coming in because W-2s haven't dropped yet, so they are coming in being that they're self-employed individuals. So, which they're motivated to hopefully get some, a loan as well. So,
and I can give you just like a couple.
Go ahead.
Yeah, I can give you a couple things that I know that they're looking at. Like on this slide, okay, go down to the third bullet up, all the way to the bottom, and then come up. Expected federal refund amount is $10,000 or more. In the past, a refund over $10,000 is not really our customer. Our customers, the average refund we work with is in your mid $3,500, $3,600. It's ranged differently throughout the years, but I know that we requested for that to be just taken off because I don't know if it has as much relevance as it did back when we were doing RALs back in the good old days. And a lot of our code, a lot of our criteria has come from those days because of the industry experience that we have with our executives that are still on staff and have brought that information with them. It's gold is what it is. There's another one that's not listed on this slide that I know that they took off, and that is the education credit. Last year I don't know if we were the only one, but we were one of the banks that actually did not give a taxpayer an advance because of a Form 8863 that was present in their return. I know that we are actually taking that out this year, and that's and I think a couple of our competitors actually provided taxpayer loans with that form included last year. So we're basically aligning ourselves a little bit better with criteria that the industry needs, I think.
Cool. I'm good with that.
All right. Let's go slide number 10, I think the next one is. Yeah.
Yep.
So here are the fees.
Well, their RT, federal RT is going up a little bit this year to $39. as the first increase we've had in about 3 years. And the state RT, or the second window fund, will be $10. We took that down $2. If you look next to that, you'll see the taxpayer advance loans, and you'll see what our the fees are to the ERO for those advances. Of course, if you look, you'll see the $2,500 is $77, $1,500 is $60, $1,000 is $45, and the $500 is $35. I'm really happy about the fact that we have the tiers that we have, even starting at $500, because I think it's great for every office to have the opportunity for their taxpayer to walk out with something instead of nothing. And there's a strong chance that they'll be eligible for, the higher tiers, of course. But if not, they're walking out of that office with some money. All right. Most of our competitors have all gone up to $1,000 as the minimum, and we still have the $500 tier as well. And I'm excited about that.
I'm excited about it too, because last year we had 5, 8, and 12, and 500, 800, and 1200, and our average loan through the end of the reporting period, I think we went all the way out to June, maybe. I think our average loan landed at right around $804, something like that. So we had a lot of people benefit from a $500 tier. A lot of people. And one thing that I'm kind of happy about this year too is with the different tiers, and I know it's 4 tiers, and it gets, if we go any further, you'll have 5, 6, 7, it'll just be crazy. But we decided to do that because we wanted to make sure we got to the 2,500 to meet, our competitors, have competitive parity. We also love the fact that we did still tier our fees, which gives those $500 people and those $1,000 people a little bit of a break on the fee in terms of the EROs payment. So we're happy about those tiers. We landed on those tiers. A lot of our salespeople and the people on the phones were involved in setting those tiers. It didn't come straight down from the powers that be. So we're very happy with what we all contributed to that. The one thing I also wanted to talk about on the $39 first refund and then the $10 second refund. In our system, we don't follow typical industry. In our system, we don't follow typical industry nomenclature. We actually say first refund, second refund, because me and all of Margie's sales team, we talk to the ERO about their business, and we say, well, you may not do a lot of states, but you might want to look at doing states if you're in a state that has income tax. You can look at those states, and if you do the state, if you attach the state to the Fed, if the Fed doesn't come in, but the state does, we will go ahead and deduct that tax prep fee out of the state refund. So it's almost a little bit of a $10 insurance plan that the ERO doesn't have to pay for because the $10 is charged to the taxpayer. So we wanted to drop that a little bit since we went up on the Fed, but whatever refund comes in first is how we pay our EROs. And I'm sure the competition does that as well. But
yeah, that seems to be a new standard operating procedure with respect to whichever one funds first. On a little side note, at Rightway, we saw a significant increase in the number of state returns done this last year. I don't have those exact numbers, but it was substantial. I mean, 2.5 times what we had seen percentage-wise from the previous year. So it was kind of interesting. I think a lot of people are understanding that, and the PATH Act, I think, definitely made it even more so important to do the state refund, where in the past it hadn't. Cool.
Any questions on that you're getting, Jeremy?
What's that?
Are there any questions on that you're getting through the chat?
No, the question that we have is, it's related, which is, I think there were a handful of people that were surprised last year when the cost for the loan, because they had operated under the previous way of doing things in the RAL days, to where it was charged to the customer. The fee for the loan was charged to the customer, and we switched it up. And if you could, I'm sure you would be able to articulate it way better than I in terms of why we've moved the who's responsible for that payment from the taxpayer to the tax office. What's a quick little history and regulatory reasoning for doing that?
Okay. Well, it was a few years back now that it was actually Republic Bank that was the last bank providing a RAL in the industry because of the pressure that the regulators were putting on the banks that were providing this product. The RAL, to date, is still not an illegal product. Just want to let everybody know that. It's not discriminatory lending. It's not, well, there's a few things you can call it. But
right.
So the RAL still lives. Nobody does them. But it was just a little history. About 3 or 4 years ago, one of our competitors actually brought this model to the industry and really gained momentum with this model. Kind of did sort of a... Are you still there?
Yeah, I'm sorry. My phone was giving me a notification. I apologize.
Okay. So that competitor that brought it to the model, they disrupted the industry, and you can call it positive disruption or you can call it disruption. But they actually shook up the industry a little bit, and a lot of EROs took advantage of it. Now, it was a lower amount, it was a lower cost, but they actually increased their portfolio of business. They got the industry talking again. They got the other banks working on models on the same model. The following year, other banks got into it. We got into it, and we followed the same model. Reasoning for this model is when the consumer doesn't have to pay the price, there's no need for like a truth in lending disclosure. There's no need for different consumer regulations to follow because it's not a loan to the consumer. All of these loans, there are no recourse to the consumer, so the consumer cannot get in trouble or not have the ability to pay back because there's no recourse. There's no recourse to the ERO. So the model is basically the bank lending money with no recourse of getting that back. We cannot go after anyone. So the consumer advocates, while still concerned about this particular product, regulators, while looking at it, and I mean it's a bleep on the radar certainly for the past few years, the consumer isn't harmed or injured in any way because of the APR that is usually attached to loans like this. So that was the model that came out, and that's that the industry followed, and that's why that model is still prevalent today.
Got it. So the administration cost and the regulatory burden to you as a bank is dramatically decreased because you're not having to go out and provide all of the oversight and on-site audits and so forth that were required under the RAL, because the taxpayer really isn't burdened or made vulnerable, or it's not predatory or in any way. Is that relevant as well?
That's relevant, and we have a monitoring program in place. We still care about the consumer in terms of their experience, their entire experience, not just with the loan product, but with their experience with the RT, their experience with any of the ancillary products.
Right.
So we still do a monitoring situation with them as well. But who knows? Maybe the RAL might come back. I mean, people are looking at that model again. Again, it's not illegal. But if you come out with that model, you you will be even a bigger bleep. So you just better have your your ducks in a row, and you're following all the consumer regulations. And there's been more regulations that's come out since the RAL ended. So it's I don't know. The future looks bright.
Yeah.
Yeah.
So the major advantage for the tax office is the ability to market a a loan product to attract the additional business. And now that it's become industry standard to an extent, everybody obviously, there's a little bit of an advantage here, there, or wherever, depending on who you're banking with. But the expectation of the market is such that now you are offering, a loan product. And if you're not, you're depending on your market location, demographics that you're serving, you're at a disadvantage.
Right. I mean, the market is dictating now, and when it dictates, and the person the ERO down the street, or the big box stores, I mean, if they're providing something that you need to provide, you definitely have to get on board. So, I mean, I look at this as, getting more people into your location. It's supposed to, put some more foot traffic in your location, and the needle hasn't moved that much in terms of more foot traffic, but I think this year we'll probably see a little bit bigger hike in it. The one thing that I always tell the EROs that call about that may have questions about it, or are looking at the loan tiers and the cost to them, I always tell them it's going to be a marketing expense for you. You're trying to market to your customer, to new customers, to come into your location and get a loan. Now, they may not get a $2,500 loan. They may just get the $1,000 loan. And they'll probably be happy with that. So just, make sure you set expectations. The one thing that I always tell the EROs is look at your entire portfolio of business. And how would you market to your entire portfolio of your business? Not just the RT clients, but, just regular return clients. Would you spend $3,000 on a radio ad? Would you get a billboard? Just look at what you do from a marketing standpoint. And then look at this. You'll be able to provide this as a marketing expense. And like last year our average loan was $804. The fee for that was $35 last year for the $800 loan. So if you look at your portfolio and you say, well, I'm going to go by Kenny's information from last year, it's historical, it's accurate. So the fee for the $800 loan was $35. This year is going to probably be right around the $1,000 loan. I would take your portfolio and take that $45 and see if you had 100 clients and 50 of them got RTs last year, apply that $45, and that's how much you'll have to spread out among your entire portfolio. Does that make sense, Jeremy?
Makes perfect sense to me. So I think we're losing a little bit of people just because we're at coming up on that hour mark in terms of their attention. We haven't lost any attendees, but there's a little meter that shows whether or not they're paying attention. So wake up. Go pick up a coffee.
Well, we can probably, in the interest of time, we can.
No. I want to finish the remainder because I can see these slides coming up as it relates to Illinois, which is definitely a topic to touch on quickly. We do have offices in that area, and we know that they are treated differently with a special set of circumstances. So if you just want to touch on that, that'd be great.
And that's why we included this slide. I mean, in this slide, the ERO not only has to pay for the tax. If there's a taxpayer advance associated with the RT, they not only have to pay the RT price, the taxpayer loan price, we will charge them the RT and the state if the state comes in.
Yeah. And the service bureau fee and transmitter fee for
there can. I mean, when you read the disclaimer down there, you just any charges from a third party, transmitters, service bureau, whatever. I mean, it's really weird how the AG did in Illinois, and so that's basically where we landed and how we handle taxpayer advances. in Illinois. So it's a little bit more an expense to provide taxpayer advances, but it's very doable.
And they have to be very aware. And when they go and they opt in, that information does appear when they opt in for that program in Illinois. And I believe we're going to have it added to the guide this year, but it's easy to overlook. And then, you know, some will didn't read it, possibly, and then they're stunned when they see what's coming out of the prep fees because they didn't anticipate that to come out of the prep fees. So it's just to be really diligent and read the information there and realize what you're going to be charged for in the end.
And again, the EROs that we have in Illinois, we try to reach out to them and talk to them a little bit about this and basically present what I basically did for the last slide in terms of marketing. If they want to compete with other EROs that are doing advances in Illinois, they may have to adjust their tax prep fee slightly to make sure that they're not losing a great deal amount of money by having to pay the taxpayer advance fee, the advance processing fee for the first such refund, and then the $10 advance processing fee for the second refund. So, and
yep,
that is, it's disclosed.
I think everybody's getting from the area is getting accustomed to that, being the standard for the state of Illinois. I know Chicago's, they're pretty crazy in terms of how they regulate tax preparation offices, declaration of preparation fees and filings to the city and so forth, but everybody's getting accustomed to the chaos. So thank you for touching on that. Let's jump over to the taxpayer cash rewards.
Yeah, that's the loyalty program. So this will be our third tax season with the loyalty program, and what most EROs use this for is more of a customer referral program. We haven't changed it over the years. We've thought about maybe raising the amounts or what have you, but it's been the first year we thought it was successful. The amount of cards we delivered on this program went beyond our expectations and our forecast. Last year it went even further beyond our expectations and forecast, so we're hoping the same for this year. And the reason why we came up with this is because we had EROs that were working with us in the past, and they would go out and they would buy, $25 gift cards, keep them in their desk, then say, hey, bring a customer in, or if you bring 5 customers into me, I'll give you a $100 gift card. And somebody mentioned that someday with one of our salespeople, and we ran it up the chain here, and we actually coded it, and it's in our Refund Advantage portal. It's the loyalty portal, and we provide you cards. So it's your money. We just loan it to you. So basically what we'll do is we'll underwrite you just like we underwrite with every other advanced program, and we will give you an amount. Say, for instance, you'll have $1,000. So you have $1,000, and you can spend that $1,000 by increments of 25, 50, and 100. That is another moving sort of amount, to Jeremy's point from when we were talking about advances before. Once you start using the loyalty cards, and then once we start taking back those $25 or $50 or whatever, you can start using loyalty cards again. So it's actually underwritten on a daily basis, so we can make sure that you have enough money in there for your loyalty cards, and as they start paying off, you can order more loyalty cards. So, and that turns off towards the end of February as well. This is the loyalty program part of it.
Right. I mean, so this is. I'm sorry. Go ahead.
They can use that card again as a disbursement for their refund advance. So it could be, end up being a permanent card for them.
Very cool. Does that make sense? Yeah. They can put a card for them for not even, if they can get the refund put on it, and then when they get the refund put on it, it's actually registered and they can get it personalized. They can just use one card through this whole entire journey through Advantage. They put their payroll on it, whatever. Yep.
Nice. I was just going to say, depending on how many programs you opt in and the dollar figures and so forth allocated, these are the things that you want to keep track of and have some sort of an ongoing total so that you know what's going to then be backed out of the first drops or on an ongoing basis, just because the accounting of so forth. Now, RA's got great reporting. Still going in and figuring out who, what, when, where, why, when you're dealing with 3 different programs, the tax office startup, basically the advanced preparation fee or in-season cash and loyalty programs. Oh, and loans. So offering the loans and having that backed out of prep as well. It's something that you should definitely measure and make sure that you're not just going out there and getting a ton of it and don't have tracking of some kind in place to know what's going to, then you're going to have to pay back by taking advantage of all of the programs Refund Advantage has to offer. The costs associated with each one are very much reasonable, and I think they're great. It's just, again, measuring them as opposed to what you think you have coming in to what you do. Everybody seems to get a little bit surprised about the amounts that are then recaptured and when they're recaptured, and you get kind of that aha/oh crap moment to where then they understand how all of these pieces kind of work together. So definitely encourage everybody to, if you're going to use them, don't have the oh crap moment. Make sure that you understand how these all work, interrelate, and the accounting and tracking to know exactly what you're quote unquote on the hook for / paying back. Just a little, PSA, public service announcement there. Moving on.
Jeremy.
Go, sorry.
That was so well. Thank you. No, yeah, thank you. You said it so well, because we had a pretty good amount of EROs that did have that oh crap moment last year, and the reason why and that's the reason why we tweaked one of our reports. It's the reconciliation report. We actually have a dashboard now.
Nice.
Hopefully help. Yeah, it's hopefully going to help them see each category, right? You have your loyalty category, you have your software advanced category, you have your taxpayer advanced category. All of them will be on there, and it will subtotal and then total at the bottom. So you do see your position, or your disposition rather, at all times when you run that report. The dashboard might not give you as much detail, of course, but it will show you to, and when you log into the portal and you see that, hopefully that will keep everybody on target, because like if you have 10 more loyalty cards that you still want to give out, but you can see your total exposure or your total outstanding to the bank, what you owe the bank is $20,000, you're not going to give out any more cards. You're going to wait until you get that amount down, and then you can start working the cards again. And that's what we've told people in the past. So your explanation of this was totally on point. So thank you.
Thank you. Next item is client retention postcards.
All righty. So this is a nice perk for customers that are coming back to us. Of course, we can't offer this service to new ones because we don't have the taxpayer data yet. But for those who were with us the previous year, if they opt into this program, they are we'll print these cards, we'll print their information on it, their business address, their office phone number, and encourage them to go back to that office, to that tax repair, and get their taxes done again. All we ask is that the ERO pays the postage, and that will come out of their fees as well. If they're new to us, we do have client retention cards that we can send out to the office if they care to use those for a very small charge.
Perfect.
Those usually go out in January, too, the very first week of January.
Yeah. Let's hit the next one, the free taxpayer support tools. Now, what we do is not only do we try to take care of our premier EROs that we work with throughout the year, we try to provide them and the taxpayer tools to make the taxpayer's experience as best we can make it. So, online there's real-time updates. That's the website they can go to, taxpayerinfo.com. We do have, it's a free service, Is My Check Ready? And it's a toll-free number and a website. Is that Vera? Is that Vera or is it?
The Vera
yeah,
card,
yeah.
the card is
Yeah. So, and we also have the text messaging. I think everyone, I think there's no one that doesn't know what text messaging is now. But text messaging when their tax products are ready. And then, of course, we have all of our customer support. It's live customer support. We have it year-round. And the support is bilingual, and we try to help as many people as we can when they call in. The free taxpayer assistance business cards, we call it the Vera card. When we give this to everybody, looks like little business cards. We put those in your starter kits. It goes out to you. It actually helps the ERO help their taxpayer, and when their taxpayer calls them to see if their check's ready or their refund's in or whatever, the taxpayer still may do that, but this does kind of detour them a little bit and give them a way just to call into our phone service and get the latest update on their refund, and that's basically what everybody calls daily on. So hopefully they can hit that either 800 number or go to the website and get the information they need. That helps the EROs out a lot more. That means we're taking the phone calls and not them. The next slide, which is basically the last slide, because the last two slides are really just call us and we'll take care of you if you need anything. But the one biggest and we've already addressed this. The one biggest question that we got is, can new EFINs offer taxpayer loans with your bank? And we say yes. So we wanted to make sure we reiterated that. And the one other thing that we heard on the phone, on the floor at these IRS shows that we've gone to, and even from competitors, that we have a cap, a tax preparation fee cap of $1,600. And I think that's higher than most, if not all, of our competition. And we decided to keep it there. We've been flexible in the past. Last year we took it up to $1,600, and that basically serviced everybody that needed to have a little bit more flexibility over $1,000. Most EROs that provide services and do last year taxes with this year taxes, or there's another business that they have, they did notary for you, or they did something else, they can add it in their tax prep fee, business returns. They can just add everything in there, and $1,600 is the cap. And we get a lot of applause for that particular cap. So we wanted to make note of that. And the fee advance qualifications, the fee assist to the EROs, I think we've beaten that. Yeah, we've beaten that with the global slugger. We have beaten that one good. And I think that's the last slide is.
Our phone number.
Yeah, it's our phone number. So keep that, or get a hold of Jeremy, and Jeremy reach out to us. But Jeremy, thank you so much for having us on today. We really appreciate you bringing us on and letting us talk to.
Absolutely. We appreciate it. Just a couple of quick little questions from the queue here. If you still have cards left from the previous season, can you use them for any reason for next season?
Now, last year I would have said yes. This year we changed our card provider, our plastics provider, so you have to destroy them. Good question. And that's going to come out in your welcome letter when you welcome letter.
Gotcha. And a question that I'm trying to decipher anyway, we'll give it a stab. Question reads, how will you handle outstanding loans from clients with balance due to refund amount IRS dispersed in previous year, meaning there wasn't enough for the loan repayment? So there was an offset of some kind to the taxpayer refund, and they were deficient between the loan amount and everything else. Now, I think one of the important things to touch on here real quick, Kenny, is if you can talk about the order of payment, meaning the prioritization of fee payment as it relates to bank, transmitter, ancillary fees, prep fees kind of deal. What's the order of repayment with those?
While Margie pulls that down, I don't know it by heart, and I don't have it right in front of me, but while she gets that, I'm going to go ahead and answer the first part of that.
I could answer that, I think. I said I think I have that in terms of the way that people get it. I think you guys get as much money as you can recapture first. Secondarily, if there's been if that's covered and there's additional fees to be dispersed, I think it then disperses to the transmitter add-on fees and the transmitter tech and trans fees. And then if there's funds related to that, I think it goes to ancillary service. I genuinely think that the tax office gets paid last out of that.
Process last.
Yeah. And so that's the waterfall of fee payment, yes. So the one thing that I wanted to cover, and thank you, Jeremy, and if anybody on the phone, or if Jeremy, if you wanted, we can go ahead and pull that from the specs, and that's what Margie was going to try to do real quick, but we'll pull that from the specs and forward it to you, Jeremy, so if anyone needs that, they can get it from you in the future. The one thing about a taxpayer loan that was not fully paid in a previous year, since all of our taxpayer loans are no recourse, that means we can't collect on them the following year. So if they were deficient last year, we wouldn't be able to collect anything from their refund this year, but they may not get a tax loan this year. Does that make sense?
Yep. Makes perfect sense.
So we don't take any money, but we may not give them a loan. Now, if it was offset like by $12, I'm sure there's logic in our code that says if it's more than 25% or whatever, do not do a loan. But we try to do as many loans as we can, of course. But if it's a big offset, then they probably won't qualify for the loan this year.
Sweet. I think we answered that thoroughly. Wanted to just ending on that note, if there's no other questions coming in, which I'm scrolling down, and it looks like we're good for the time being, just take a quick second to thank you, Kenny. Thank you, Margie. We, as I said at the top of the hour and 23 minutes, we have a fantastic relationship with you guys. We appreciate the support and the effort that you guys put forth and joining the Right Way community and sharing with us your upcoming program. So thank you. And anything you guys have to add on the end? Margie, Kenny?
No. We're ready for the flawless execution of tax season 2018. So I hope you're ready for it too. Flawless execution.
Keyword.
Right.
Flawless. All right. Well, good luck with that. Quick question. Do you guys have a phone app for taxpayers?
We do have a phone app for taxpayers. It is, well, I'm sure you can find that on the App Store, but I'll send that to you as well.
And do you have a mobile app for EROs?
We do. And the EROs love that. Yeah, sure do.
Just covering items from our previous one. Going through my little matrix here. All right. I feel like we've beaten this. We got it handled.
All right.
So thank you guys again. Thank you everybody who showed up. Yes, sir.
Yeah. Call me when you can.
Yep, we'll be distributing this to everybody via email. We'll upload it to YouTube. We'll take the slide deck that Kenny and Margie prepared for us and attach that as well. And yeah, we should be good to go. So if we, right. I think we're good. Awesome. We'll conclude it on that. All right, dude.
Okay.
Thank you, Margie.
Everybody.
Bye. Thank
Bye.
you.